Okay. And are there some simple things, if expats out there own 1 or 2 properties and they're married, that they can be doing about sharing that or apportioning that between 2 spouses, like the becoming tenants in common rather than joint tenants, and using sort of declaration of beneficial interests? Might that be something worth considering?
That's certainly something that you can consider. I mean, you can no longer, I would say very broadly, shift income between spouses easily, unless you have made the appropriate declarations about the capital holding underneath it. It used to be you could just sort of say, well, we own the property 50-50, but we elect to be taxed 90-10, and you can no longer really do that. But also at that point, you might want to think about a partnership structure.
Okay.
Then you could play, you could do that kind of income split of 90-10. But again, that's only something you really want to be thinking about if you have a lot of properties and you want to, because otherwise, you know, the costs of running the structure are prohibitive compared to the amount of tax savings that you could make. Otherwise, yes, it is just simply a question of declaring how you're holding the property from the outset, or adjusting that holding later on.
Okay. And just LLP versus limited company, just sort of upsides, downsides, because some people invest and transition through LLP into limited companies, don't they? They don't always just stay in that one structure.
No, and that's certainly a possibility. I mean, the thing about the LLP is you're not going to have you'll still have your interest restrictions, but you won't have the additional SDLT, and you can then use it to build up your portfolio. And there are ways of then turning your LLP into, or sort of incorporating it in a way that's reasonably tax-free. You would get taxed. I mean, LLP is a look-through, so you get taxed on the whole of the rental income. You wouldn't have the opportunity, particularly, to roll up tax-free. You're not obliged to take the funds out of the LLP, but you are taxed as if you have done so. So you can leave the property, then the net proceeds in, and roll those up and reinvest. So, you know, they do have their place. Perhaps as a sort of an intermediate stage before becoming a proper full portfolio landlord.
Okay. Dave, is there anything that you want to add to that before we go on to the next area? Anything on the limited company, SPV structure versus investing personally?
Obviously, if people are buying new property, then they have to look at the whole picture, and it's not just a question of the tax situation. You also have to look at the ability to borrow and the mortgages that are going to be available to a corporate vehicle. Certainly most brokers will now have a much bigger portfolio of lenders who are willing to lend to corporate bodies than they previously used to be. There's obviously been a number of mortgages that have been taken off the market during COVID, and no doubt if maybe landlords have taken, for instance, any mortgage holidays, that may affect their ability to borrow further. They'll look at that. It doesn't affect your credit rating, but it may well affect the ability to borrow new money if you're looking to invest again. So that's something to consider. The mortgage holidays are still available until October, but people need to seriously look at whether that is absolutely necessary, weighed up against the effect it could have on a potential lender who looks and asks those questions. Did you take a holiday or not? That could have a bearing on that. And that's obviously both for corporate and potentially for private borrowing with investments and properties.
Yeah, we're living through very strange times at the minute, where normal rules seem to be up in the air. Just hearing lots of stories of valuations, you know, bridging loans, all sorts of things that a lot of lenders don't seem to be playing by the rule books or what you'd be normally expecting. So let's hope that settles down pretty soon.